I purchased this property, and this property all this year, and they all cash flow. And your real estate agent, your lender, they are praying that you don't make it to the end of this video. Let me show you 7 strategies that I've used this year to buy properties that do cash flow, and how you can do it too, if you want. I flip properties, but it's not my first choice. My initial intent is to always hold long-term for cash flow, appreciation, depreciation, and amortization. Primary goal up front though is cash flow, and that's when a property's monthly income exceeds its monthly expenses. Here's how I quickly calculate cash flow. When I find a property, let's say it rents for $2,000 a month, that's the income. And out of that, I deduct taxes, insurance, maintenance, vacancy, and property management. Those are my expenses. Those expenses, they typically work out to be about 35 to 45% of the income. So I use 40% as my quick and dirty math figure. What I'm left with is my net operating income, NOI. And with that, I have to pay the mortgage payment. And as long as the mortgage payment is lower than the net operating income, the property should cash flow. That's my quick test. And if it passes, ding, 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 I make an offer. Now, this was rather easy for most people to do the last few years because the mortgage payment you could get from a bank was lower than the NOI. Now that interest rates have more than doubled, not so easy. In fact, in most places it seems downright impossible right now. I mean, if Bank of America, Chase, or Wells Fargo type lending is the only tool in your toolbox, it pretty much is impossible. So for most people, they've got 2 choices. They can 1, suck it up, buy now, and cover the difference between the income and mortgage, which really isn't that bad of a deal if you can afford it. Here's what I mean. If rates continue to go up, then look at what a genius people will think you are because you got in when the rates were low. And if rates go down, you're still a genius because you bought when prices were low and now you can refinance into the lower rates too. Or they can just sit around and wait until rates come back down or rents go up. And who knows when those 2 planets will align again. Those are the 2 options that most people have, but not me. I've got 7 other options still in my toolbox to cash flow properties despite what banks are doing. And I'll give you a list if you stick around until the end, and I'll give you our internal operating procedures here at Epic on how to pull each one of them off, but only if you smash the like button. For these strategies to work though, in addition to the cash flow calculation that I showed you, I make sure I check these boxes, these 3 boxes too. 1, choose neighborhoods where property owners take pride in their properties, as this contributes to maintaining property value and attracting good tenants. And 2, focus on acquiring reliable tenants with stable incomes, especially in a potentially leveling off economy. 3, maintain cash reserves or establish connections with investors to be prepared for opportunities in the market. All right, now, the strategy that I use this year and every year really is to buy at a price that will allow the property to cash flow. A low price. That's a no-brainer, right? But how do you buy at a price like that when real estate has gotten so expensive? Well, it's like this. If you wanted to buy some Nikes at a discount, would you go to Bloomingdale's, Target, eBay, or a garage sale? A garage sale most likely, right? All of those options are available in real estate too. And like a garage sale, buying off market allows you to negotiate directly with sellers, avoiding competition and avoiding bidding wars. It's how I bought every single one of these this year because buying off market leads to lower purchase prices, increasing the potential for positive cash flow from day 1. The second strategy that I've used this year is by borrowing money at an interest rate that allows for cash flow. Another no-duh moment, I know. So how do you do that? Well, I don't go to a bank for a loan. I shop elsewhere for mine. And I don't just get lower interest rates, but also longer repayment periods and reduced upfront costs. I'm talking about seller financing. These types of deals, they allow me to secure properties with better cash flow potential, even in a higher interest rate environment. Have you checked out Zillow these days? Go over there and type in seller financing, and you'll see more of these deals right now than you've seen in years. Combine seller financing with buying off market and get the best of both worlds, cheap prices and cheap money. Now the third strategy, the most recent one that I used to buy this one, is not to borrow any money at all. And I don't mean I used all cash, I left the existing loan in place and took over the payments. This strategy is called subject to, and it's been relevant the last 70 years. I've been using it since I started like 17 years ago now, and it's becoming more and more relevant than ever today. By taking over the payments of an existing mortgage, I buy properties without needing new financing. It's like I buy the house and the money, it just comes along with it. Because we're coming out of a 3-year stretch of historically low interest rates, there's a bunch of 2, 3, and 4% loans out there just waiting to be taken over. No new loan, no new bank fees either. I save a ton on closing costs. Have you seen this? Housing starts in the US unexpectedly jumped 21.7% month over month to a seasonally adjusted annualized rate of 1.631 million in May. That's the highest level in a year and way above forecasts of 1.4 million. This is why you don't want to wait for the perfect conditions, because it doesn't get any better than this. The demand for housing can no longer be ignored. And when demand is high, you want to control the supply. And builders, they know this. They are shifting into high gear to meet that demand. And they're offering investors massive incentives, such as lower interest rates, reduced down payments, and extended repayment periods. And this is the fourth strategy, by the way. I haven't used it, but I'm going to next month. This is builder financing. And these favorable terms contribute to a higher likelihood of positive cash flow, as the financing package is specifically designed to support the profitability of the property. If you want to join me for a road trip, I'm heading out with Mercedes to check them out. She's got an exclusive on these, by the way. So go to cashflowsavvy.com and click on property tours in the website's navigation for the details, grab a ticket, and we'll meet you out there. The fifth proven strategy to buying cash flowing rental properties is another tried and true approach to better terms and flexibility. And I've used this in the majority of my deals to some degree, and I'm using it more than ever right now, and that's through private money. By partnering with private investors, I access funds without the constraints of traditional lenders, and my private investors, they get to come along for the ride.
Cheers.
My private money loans, they come with more favorable terms, such as lower interest rates, flexible repayment schedules, and reduced bureaucratic hurdles, which can easily translate to improved cash flow potential in a higher interest rate environment like we're in right now. Who do you know with a 401k? That's my go-to place by pumping some interest-free money into their retirement account while I build my real estate empire. The sixth strategy is one of my favorites because it presents one of the greater opportunities for having your cake and eating it too. I'm in the middle of this deal right now. I'm talking about partnering, but specifically partnering with other investors who have complementary needs. For example, a doctor, a lawyer, a pharmaceutical sales rep, or dentist who earn high incomes as employees, they get killed in taxes. I'm always looking for these types of people because when I partner with someone like that, I give them all the depreciation on the property to make a huge dent in their tax liability so they can keep more of the money that they're already earning.
Great success.
And most of the time, I take all of the cash flow because every $300 in my mailbox helps. And it's typically an insignificant number for them. And then we split the equity that's paid out when I sell or refinance the property. Now, those first 6 strategies, they all have to do with lowering a property's expenses to reach a cash flow goal. The 7th one is all about increasing a property's revenue. And there are several ways to do this, such as renting a property out by the room, like for students or hospital staff. Now, I haven't done that one before. Or you can add amenities or leasing out unused portions of a property for parking or storage. And I've done those, so I know those work. But the most practical right now, where I'm getting the most bang for my buck, is by turning new rental properties into short-term rentals. And at the moment, I'm doing nothing more than just marketing them on a platform like Airbnb. I'm getting a 3-to-1 higher rental rate compared to my traditional long-term rentals, which turns just about any house into a viable income property. The income has been really good on the one that I picked up this year, but the expenses are pretty high when it comes to turnover. So with the advice I got from my good friend Jay, I registered my property with Ale Solutions, and they placed a 3-month tenant for me. My new tenant's house had a fire, and they needed a place to stay while they rebuild. Now, it's not quite 3-to-1, but it's close enough, and I won't have the turnover expenses. The net income on this arrangement will be much better. And now that I think about it, I just refinanced this property with private money from one of my student partners to increase my cash flow even more. If you'd like a list and a how-to of all the different creative strategies that I use to bring new team members up to speed, go to creativefinancing.us. It's free with direct access. You don't have to opt into it or anything like that. So, of what I showed you today, which one do you see yourself tapping into first? Let me know in the comments below. And if you'd rather listen to this on the go, you'll love the Epic Real Estate Investing Podcast. It's the longest running real estate podcast on the interwebs. And what did you find most valuable just now? Let me know below. And who do you know that may also enjoy this? When their name comes to mind, please share with them. Oh, and I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching. Take care.